I'm Dan Fitzpatrick at stockmarketmentor.com, and it is Saturday, July 9th. In this free chart video, I want to look at Twitter. Here's why. It's working. Look, this thing's been in a death spiral for so long, it gives spirals a bad name. I mean, this really has been crushed. But since this February low, and I think that was the low, you got a double bottom, and now the stock's moving higher. And there's a few different points that I want to make on that. First of all, there's the low, 14 bucks. So during this base building process, and certainly when the stock was pushing up against the 50-day moving average, and then even a push a little bit above that, you can be buying this stock, and your thesis is, hey, as long as the stock stays above the 50-day moving average, or certainly stays above this support line, then I'm getting in on the bottom. If the stock falls back below that support line, then I want to be out. So you take whatever number of shares works for you, such that if the stock had fallen back, and it's too late to be doing this now, I'll show you what to do now in a minute. You're buying lower. Then if you had put your stop in at like $13.95, something like that, then you look and say, okay, how many dollars am I willing to lose on any given trade? And you should have a number that, given your trading account, you will risk no more than X dollars, whether it's 100 or 100,000. Just have your number, and then whatever that number of dollars is, then divide that by the difference between where your purchase price is and where the stop is, and that's the number of shares that you should be buying. Okay, so that's when the stock is down lower, starting to push up. But now that the stock's moving higher, okay, we want to look at a few things. First of all, do we think it can continue to go? And I would say yes. There's a couple things here, right around 20 bucks or so, which is still 10% higher than it is now. Even a little bit more, is the 200-day moving average. So that's a bit of an issue. But there's some fundamental things that are happening here. The big news was, a while ago, Twitter got the NFL to agree to allow them to stream some videos. They're paying for that content. They paid $10 million for it, right? Okay. Facebook offered more. But they said, no thanks, Zuck. We're going with Twitter. You guys are too cheap, and they are. And so they paid $10 million. They've sold $50 million in ads. That's a pretty nice return on investment. And now they're talking to the NBA and soccer as well. So the bottom line is, and they're talking to the networks that are broadcasting these things. So the bottom line is, you're starting to see kind of a sea change, that's SEA, a sea change in how people are looking at Twitter. I still look at it as inhabited by a lot of people who have an overestimation of the number of people who are really interested in what they think, but that's just me. I probably fall into that category too. But the idea is that these media outlets, these media companies, these producers like these sports franchises are looking at Twitter. And you know how this is. Once there's kind of it'll have a snowball effect. You're not going to, it's probably more likely that Twitter's going to get other franchises. So I think that's one of the reasons why this stock is moving up. But also just that it's broken a downtrend, and sometimes stocks do what they do just because that's what they do. So you stick with the trend, you use this type of a trend line and keep a trailing stop all the way up. As the stock moves higher, the trailing stop gets higher. And don't forget about the fact that on the 26th of this month, the company reports earnings, and I would say this: if the stock is up at 21 or 23 bucks before they report earnings, you need to sell before they report earnings. On the other hand, if for whatever reason the stock rolls over and it's down here, I think you need to buy before earnings. All right, that's it. Now, members, get over to the weekend update. Specifically, I'm talking about our gold stocks and the aerospace stocks. A lot of our stocks are doing really well, and we're going to keep packing it on.